Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, I will talk about the net worth tracker that I keep tracking for my own net worth and how it has actually grown over a period of time. Now, in this episode, I will show you different type of assets, different type of liabilities that are there, and how they have actually grown in the last 18 months and how I've optimized them as well. Obviously, we know that the market has not been great. So let's understand how I have basically maneuvered this entire market scenario and let's look at it in a very deep dive motion. Again, this is not to show off. This is not to show different numbers. All the numbers are actuals. This is just so that even you can learn something from the approach of how I do things. Okay, so let's quickly begin. As you can see here, I've put the assets. This was when I had purchased it. These are assets that were in the past. So let me show you one by one. So March 2024, I had purchased one house in Devnalli for approximately 1 crore in Brigade Orchards. And this is something I've said multiple times on my channel as well. I still hold that house and I will tell you how much it is as of today. After that, in June 2025, last year, I bought a house again, no EMI on this. Basically, here I got a very good deal. I knew the developer. So I got into investor quota, bolke you get something like that. So investor quota basically means I get the house at 50% discount. But the only caveat of this is you have to give cash. So basically I gave half the money upfront, which is around 60 lakhs upfront in cash. Cash as in check, not cash. I don't have that kind of cash. But wire transfer. And then once they launch and all of that, obviously risk is higher because what if they don't get RERA tomorrow, etc., etc. But risk is higher. But reward is also higher. So they give it to you at almost 50, 40, 50% discount. Then gold is something I've constantly been buying. Now this is investable gold. This is not gold that is with my wife. That is separate because I'll never get to see it. She's never going to remove it from her neck and say that, okay, gold price has gone up. Please go and do your trading. वो नहीं होगा. So this is gold, which is, I'm trying to keep gold in gold bees and different other places for long term, right? And I've been building it over a period of time. So earlier I had, till now I invested around 4.5 lakhs into gold. My son's PF, which I had started again a year ago, I keep doing SIP. September 2025, SEBI, before that, since actually May 2024 I've been started. It's going on. It's not September, actually, it's May 2024. So last 1 year, I think it was around 12 lakhs and now it's at 18 lakhs. But again, that is going on. My stock portfolio, which has been being built for a very long period of time, that is was currently at 2.54. Now we'll see how it has become after this amazing fall. But around 2.5 crore is in pure equities. Okay, not F&O, nothing, just pure equity buying. I think I only have around 9 or 10 stocks and pura 22.5 crores is in 10 stocks. Then I have US stock. This is something I started in March 2025. I had gone for the NVIDIA event, and that is when I saw the GTC event, sorry. And then I went and invested in NVIDIA, AMD, and then AMD did really well. And then I started doubling down more on this entire investments, right? So 1 year ago, the assets were, not 1 year ago, in the past, the assets were approximately 5.2 crores, right? Now, house again, 60 lakhs I've invested, 60 is pending, but I'll show you, I put that in liabilities to net off the expense, right? Coming to liabilities, the first house that I had taken for 1 crore, I had put 25% down payment, 75 lakhs was the loan. Then I took 2 cars, one is an XUV and one is an electric car. One wife, one me, right? So that was the loan that I had taken for both these cars. As you can see, they are not luxury cars. This one was 29 lakhs loan. This is 18 lakhs loan. And then house 2, around 70 lakhs was pending because when I bought this, I only put 50. Now I put the remaining 10 lakhs as well. So around 60 I put in. So my liabilities at that point was 1.92. So if I had to calculate net assets, which is asset minus liability, it was around 3.28 crores. Which was 18 months ago, right? And my loan to asset ratio was 36%, means the amount of loan I had to my assets was 36%, means which is absolutely fine because if I had to clear my entire loan, that let's say the housing, and these are all housing, biggest loan was both housing backed loan. So I was not too worried about it. But if I had to liquidate my entire liquid fund and clear this loan, that was also possible. So I always try to ensure that, my liquid portion is more than my fixed asset portion so that tomorrow if I have to liquidate for some reason, it is fine. But this house now, 2024, I had bought it. Now it's coming to possession because this was a Brigade property. Let me show you how this looks like right now. Now comes the beautiful part. And I've also put growth rate here just so you understand. The house one that I bought in March 2024 in Brigade. Now, obviously, when I bought it, it was like the second large flat in that apartment. I think it was Brigade Orchards, Ivory Wing. And I got it for 1. And immediately after that, the rates went up. The slab rates went up. The price in the local area, there's some name for it. They keep doing revision of base prices. So that went up. And right now, the house is going for 1.6 crores, right? But it took 2 years to reach this point, exactly March 2024 to March 2026. It's gone up quite a bit, 60%, but in 2 years. But luckily, because real estate prices in Bangalore have been flying, they have been going up. So luckily, this has done well. The second house again is launching this month or next month, and they're launching at 2.1 crores. So when I bought it in June 1 year ago, it was not 1 year, few months ago, it was at 1.9 launch price. But now there are multiple new guys coming in, so it's going to be launched at 2.1. So it is almost a 75% growth rate. By the way, please note that these are not liquid investments. I know there are some guys who will comment and saying try to sell the house and you won't be able to sell. Let's leave that aside because they're liquid investments. I don't even need to sell them. All I have to do is just go to a bank and say, boss, look, I have this house. I want some money. Give me loan against property. So I really don't need to sell that house. I can still get money out of that house. But yes, if I want to sell, eventually I can sell, right? It might not go immediately, but looking at the market, it is quite hot even in Bangalore. And as long as the market is hot, I'm lucky being in the right place, right time. And that is why this has done well. So these two have actually done really well. And both of them are approximately 55% of my entire portfolio as of today. Gold has gone up around 100%, as we know, 111%. It's reached 9.5, but it's only 1% of my assets. So it didn't really change my entire portfolio. So very wrong portfolio allocation I did. Ideally, gold should be 10% of someone's portfolio or 5% of someone's portfolio, but it is 1%. So this became like pocket money. It didn't do really well for me. My son's PF has reached 16. Actually, it has grown less by 11%. It has gone down because this was all large cap companies and they have all gone down. So the whole portfolio is down by 11%. But I'm adding more and more. I keep adding more and more into it, right? So it's now minus 11%. My stock portfolio is again minus 8% down overall. It was at 2.54. I think it's down 25 lakhs right now, almost 30 lakhs. But in this 2.33, I have kept almost 15 lakhs in cash, right? I was waiting for the right time, removed all my loss, and I book my losses very fast. I have taken good losses this year as well because as you can see, my portfolio has not gone up at all. Stock portfolio has gone down, portfolio level 8%. Portfolio level 8% is quite a hit. Most of it has gone down because I invest mostly in small and mid cap. So now I have started buying a little bit of REITs, a little bit of InvITs to build some defensibility into my portfolio. I have around 15-20 lakhs in cash waiting for the right opportunity to actually deploy because I feel even now the market has not clearly given a signal that it's going up. But this is just dry powder that I've kept, but very bad because portfolio level has gone down 8%. And this has actually been down since September 2024. It has not gone up. I've still not seen green in my portfolio since September 2024. Not a single stock is in green. Everything is red. And everything is an average 12 to 15% down. But I'm okay because 12 to 15% down is fine. One company is down 40%, which is okay. Long-term game. But yeah, I would love that if this goes up by 10% even. So because money makes money, even if this goes up by 8% or 10%, for me, it adds a huge number because that's 23 lakhs in gains in a year, right? My first job was to build as much capital as possible because money kicks in after a point. But yeah, minus 8%, so not very happy there. US stocks, now this was very funny. US stocks, I had invested totally till date 28,000. Now that we made money there, we made almost a good amount of money there. That has gone to around $35,000 in the basket. When I invested in the US account, it was 84 rupees per dollar. Now it is 93 rupees. So beautiful growth has happened in this portfolio. So 20% was my real growth. The rest of it was, rupee appreciation. So now that I had put 23 lakhs, now it's 32 lakhs. If I withdraw, and this is liquid. So all of these are liquid, right? All of this is liquid. And unlisted, I've started buying one AMC company right now in the unlisted market. Again, this is a very long-term play, like 5 to 7 years long-term play. I found it very reasonable. So I started buying that. But this is basically how it looks like. So now it looks like the entire portfolio right now is at 6.67, but primarily driven by US stocks and mainly the house one and house two because the housing market actually went up a lot. Now again, please understand these are cycles. There will be one month where housing will go up, 1 year where housing will go up, 1 year stocks will go up, housing will saturate. So that is how the market cycles work, but it's better to be diversified than not be diversified, right? For me, 50% of my assets are not stock related, which is great. This is my problem, only 1% in gold, which is a big mistake. I should have some gold or more defensible items, and then everything else is market, right? So it is quite heavy on those sides. Coming to liabilities, now this is where the fun part comes in. Last year, I cleared, from the last 18 months, I have been clearing my loan like a maniac. Right, so this March 2024, I bought this house. 75% was loan. That has gone down to 32 lakhs. 50% loan reduction I've done. Right, And when I bought that house, it was almost constructed, right? It was like 60% done. So I took the whole loan. But now it has gone down to 32 lakhs. Then every month I've been trying to prepay a little bit more, little bit more, little. I don't like it so much. The car loan, which was 29 lakhs, has become 11 lakhs. And the other one, which is at 18 lakhs, has become 17 lakhs, right? The car loan, the new one is very recent. I just bought it. So that is why it's not even a year old. So that 18 has just become 17. But this also I want to finish off as fast as possible, right? Now house 2 pending. I've given 60 upfront. Remaining 60 is there. This I've been funding via my cash because I make good money. So I've been funding via my salary only. But if I feel I need to take a loan, I will go take a loan. But these are my current liabilities as of today. If someone says you have to clear to the bank, these 3 are bank loans, and this is an IOU that I still have to give that builder, right? So this is basically 1.2 crores of loan. And coming to now, loan to asset has become 18%. Earlier it was 36%. Now it's gone down to 18% for a couple of reasons. 10 lakh reduction here, massive loan reduction here. 35 lakhs I've paid. In the last 2 years, I paid 35 lakhs of loan. Prepayment, interest ko reduce kiya. Now, yes, there is an alternate school of thought saying that, Shashank, that same 35 lakhs, if you had invested in the market, you would have made more money. Luckily, this time it didn't work out that way. I would have happily given it to the loan. That is one reason. Second, people also say that my loan is at 7.15%. Why not put it in an arbitrage fund or this liquid fund or something like that, right? That is also the other opportunity. But I'll tell you why I prepaid. Contrary to many influencers who say don't prepay your loan, let it keep running, let keep investing on the other side, that will match each other up, which is correct, not wrong. But I'll tell you my psychology. I want to clear the loan as much as possible so that I can take more loan to build more assets. Right now, problem kya hota hai na? I can keep building on the other side. But then, if my loan is still high and I have to pay the loan for 30 years, I can't take the opportunity and go buy another house somewhere. And if I have to do that, I have to anyway break that liquid fund on the other side to go buy that house because nobody will give me so much, right? Or I have to pledge that liquid fund, or I have to go give it to FD, something like that. So I would rather have this loan to asset ratio 18%, much lower than this as much as possible. And that too, my actual loan, if I remove this IOU, it is not even 18%, it is actually 9%, right? Because this is not a bank loan. But if I go to a bank tomorrow, I can go and ask for more loan. But the EMIs obviously are quite high for me. I think EMI here is around 70K. For the second one car is around 40, one car is around 50. So this is my current EMIs as of now, right? So this is how the EMI looks. So around 1.7 lakhs I'm just paying in EMI, out of which one is asset backed, two are liability backed, which I don't like because it's liability. So I want to clear the liability fast because this interest is useless. This interest, at least appreciation is coming in slowly, but these two interests only depreciation is coming in. So I don't like it at all. So, but if I clear these two fast, then definitely I can go take another house and start another loan, right? Or commercial property loan. I know some people will say that go buy a land. I don't know. I don't understand the concept of buying land. I love it, but I feel it's not for me because I get scared. I like interest bearing, income bearing securities, assets. Like this is now, if I go give it for rent, right? When I bought it for 1 crore. Today I will get a rent of approximately 4.2 rental yield on my initial buying price. Today's buying price is still 2.5-3%. But because it went up so much, I'll get around 35,000 rupees in rental income if I give it now. So the next 1-2 months, I'm getting possession. I'm not planning to sell this. I will keep it because I feel Devnali still has a lot more to offer. And if I need loan, I can always go take loan against mortgage, right? So my loan to assets ratio has come to 18%. Now, please understand this is after me finishing my medical insurance. I have a medical insurance for me, my wife and my kid, and life insurance of 4 crores. So that means worst case scenario, my loan, if something happens to me, touch wood, it doesn't. My family is very good. Like the whole loan can get cleared. Even this house also has a loan to it attached. Irrespective of this, if something happens to me, the bank will clear off this loan. So overall, this is how it has been built. So just to summarize, last year what has happened, last 2 years to now, equity has given no returns, gold has given slight returns, house has gone up, real estate in Bangalore has gone up in the last 2 years depending on your parcel wherever you are, but it has given a good return. But it is cyclical, it will turn, it might create problems, and I am aware of that the interest rate cycle, if it changes, if the government says inflation has gone up and the rate goes up, I am in a big problem. So I need to either sell it or it will not go down, it will stay flat, no problem. Then I will go take a loan against property. I'll keep it for longer period. Maybe next cycle I will sell it. But I'm not in a bad shape, right? It's not loss for me because it has given the appreciation. And the loan is also fine. So mostly next time when I do this video, maybe after a year, I'm pretty confident that this house loan one will be zero. and at least one of these car loans will be zero, or maybe even two, and I would have started at least two more housing loans by then, right? Or maybe one more because this is already running. So I'll finish this and buy one more, all right? And this will start giving me rental income of around 35,000. And this will be maintained at 20-25% as well. So that is it. So again, as I said, this is only to learn and understand. So I hope you guys understood. If you have any doubts, any questions on this, you can put it in the comment section below, and I will definitely help you out on any doubts or any questions you might have, because you might be investing, you might have questions. But I was very scared about the market, and I was very conscious that, see, now I'm a married man, I have a kid, so I can't take full equity risk like everyone else. So I have to diversify. Hence, I've kept 50% real estate, 50% equity. I will most likely always maintain this mix. Now, I don't want to do too much real estate. I will go more into equity and make it up to 60-65%, then buy another house and then go back to 50-50. But I have to safeguard my entire family, right? So that is basically how it is. Again, hope you guys enjoyed this. Hope you guys liked it. And if you did, please click on that like button and subscribe so you can support our channel a little bit. It doesn't cost any money to subscribe. Okay, awesome. Thank you guys. Take care. See you. Bye bye.